Today's market climate is bananas. We have high interest rates, we have super low inventory. Some markets are buyer markets, other markets are aggressive seller markets with bidding wars. I mean, it is not uncommon to get a contract with closing costs or one where people are paying over an appraised value. And I will say that 2023 has to be the weirdest year I've ever worked in mortgages, and that's saying a lot. I have been in real estate now for 20 years, almost 21 years, and I've never seen a market like this. And because the territory is just all over the place, I wanted to record a video on what it really costs to buy a house in 2023 and things that you should be considering to make sure that it makes sense for your budget. Now, before we get into all of that, I am going to ask you to like, comment, and subscribe. And if the video provides you with any value, I hope that you will share it with your friends or family that could also use this valuable information. Now, for those of you who are new to that channel and new to me, my name is Lizy Hoeffer. I'm a residential loan officer in Phoenix, Arizona. I work for Cross Country Mortgage, and I like to teach practical money tips so that you make smart money moves and smart home purchases. So I will say that after working in mortgages for 20 years, that the most overlooked aspect to buying a house has to do with closing costs, and the most misunderstood has to do with down payment. And both things are due when getting a home loan and buying a house at the closing table, but they're very different things and have different requirements. And so I want to break them down separately. And then at the end of the video, what I want to do is talk about things that you should be considering within your budget to make a smart home purchase. For starters, I thought it would make sense just to break down what the heck closing costs are and then to give you a general estimate on what you should be expecting. So closing costs are any of the costs associated with getting a home loan and transferring the title into your name from the seller to the buyer. And closing costs, you're their fees for the mortgage that are charged by the lender. So those are any of the origination fees, application fees, appraisal fees, credit report fees, it's underwriting and processing fees. And then you have the cost of transferring title. Now, depending on your state, you'll either use attorneys or you'll use an escrow company or you'll use a combination of both. And title insurance is typically a requirement. An escrow fee or attorney's fees are generally a requirement. There's processing and doc fees, notary fees to consider. And then there's the cost of prepaid items. So things that you prepay for in advance, like property taxes, homeowners insurance, flood insurance, if that's applicable, things like association dues and transfer fees for associations. Here in Phoenix, we have a lot of HOAs. And then there's prepaid interest from the day that you close up until the first day of the following month. Depending on your state or the way that your property was negotiated, you might have some additional transfer taxes that you may need to pay. And then there's always the cost of inspections, like a termite inspection or a home inspection, and then in some cases, a home warranty. Now, this isn't the total list of all of the fees, and depending on your loan program, you may have to prepay or finance and mortgage insurance, but this is a generally good long list of all the fees that you can expect. You can also do a comprehensive Google search. I mean, there's a variety of different lists available online, so you can get a really good idea. And I would always ask for a loan estimate or a fee estimate from the lender that is quoting you for your mortgage. The last thing you want to do is be surprised at the closing table. I can tell you that no one likes a bill they weren't expecting. And so being prepared, knowing that you are going to be paying closing costs at the closing table is a buyer responsibility that you should know. And now that you're watching this video, you do. So one of the biggest misconceptions with closing costs has to do with whether or not they can be financed into your home loan. So on a refinance, which is where you already have a home loan and you are redoing the terms, closing costs can be financed into the loan. But on a purchase, they're typically due upfront. And there's a variety of different ways on how to negotiate that into your contract, and different markets will allow for different things. I know in a buyer's market, it's common to have the seller cover a portion, if not all, of the closing costs. And in sellers markets, it's not uncommon to see the buyer pay for all of their costs and then some of the sellers. So just know that depending on the market and the way that your purchase contract is negotiated, those closing costs are going to vary. Now, things that you should be aware of is that there's a variety of ways to structure your loan and a variety of ways to negotiate your contract. And so things that you'll want to ask your loan officer and your real estate agent about in this environment is one, a temporary buy down, which is where the seller is going to subsidize lower monthly payments for you for up to 3 years. Now I can break this down in a completely other video if you guys want to, but it's something that you should be asking for because it'll reduce your payments now. The other thing to ask for is if there there is a portion of closing costs that the seller is willing to pay, and let's say it's a competitive market, would they still be willing to consider your offer if, let's say, you included them in the offer price that you were willing to pay to the seller? So there's a variety of ways to negotiate this. Also, don't forget to ask your loan officer if there are ways to negotiate it into your loan. In some markets, maybe not this one because interest rates are so high, we can oftentimes bump up an interest rate to give you the credit on the yield that we would be receiving for the rate. So it's important that you ask for all the different structures so that you can compare monthly payment and total out of pocket, and then you can make the best overall decision based on your current budget and money in the bank. Now, one last thing to consider when it comes to closing costs is that there are loan types that have different limitations when it comes to closing cost credit. Depending on the type of loan, it will allow for up to 2% all the way up to 9% in seller contributions. And you can only get credit up to the actual cost of your loan. So if you're negotiating, big credits, you have to make sure that you talk to your loan officer and that all of the credit can be used for actual costs. Otherwise, that money stays with the seller. It does not go to your down payment. It can only be used towards cost. I know some of you are going to be asking, well, how much are closing costs? Hard to say because it does change based on where you're actually located in the country, your city, and if you're using attorneys or title fees, a bank or broker. And so I got this general guideline from Closing Corp, and it says that closing costs are generally in the range anywhere between, I saw the lowest figure was $3,000 all the way up to $10,500. And this is for general closing costs for mortgage, title, prepaid items like taxes and insurance. And I don't think this includes any transfer fees like HOA or home warranty. In addition to that, if you are paying points or discount points to buy your interest rate down, this general calculation does not include that. There's some articles online that say you should be thinking about anywhere between 2 and 6% of your overall loan amount to be contributed to the purchasing budget. I hope that helps you. Like I said, it's super important for you guys to get a fee estimate when you get pre-qualified, one again when you get pre-approved, and one again when you are under contract, right? The last thing you want to have happen is to get sprung a bill that you were not expecting at the closing table. Now that we've talked about closing costs, it's really important to understand down payment costs. Now, I will say that the amount of down payment necessary for your home purchase is going to vary depending on what you want to pay for a monthly payment, what type of loan you are getting, and how well you are qualified for the loan. So just know that things like lower credit scores and higher debt to income ratios will change the type of loan that you qualify for and potentially make it more expensive because of costs due to mortgage insurance and higher interest rates. So better credit that you have, the better loan terms you will get. In terms of down payment, I will tell you that it also depends on your occupancy, the property type, and it also depends on your loan type. For qualified veterans and people buying in rural areas, they can qualify with as little as 0% down. And for first-time home buyers, it's anywhere between 3 and 5% down. And for investors, it's 20% plus down. And if you're buying a multifamily unit property, it's really dependent on the type of loan that you have and really dependent on how the property cash flows, but that's going to be anywhere between 3.5% and 30%. I just want you to understand that down payment requirements vary all across the board. And it's so important that you talk to a loan officer about the type of programs that you qualify for and get multiple different scenarios. Now, there are some scenarios in which you can get a grant or down payment assistance to help offset some of this down payment requirement. But just so you know, down payment requirements do not change. You're just getting awarded a gift or a second mortgage to help offset those costs. Now, I do just want to talk about this really quickly. That 20% requirement that you hear all over the internet or you hear really being promoted by Dave Ramsey followers, that is just an opinion about what they feel is appropriate so that you don't have to pay mortgage insurance. It used to be that most people had to pay 20% down to purchase a house, and that was before they came up with affordable housing programs in the 80s. That hasn't been the requirement for many decades. And I will tell you that most people would never be homeowners if they had to wait until they had 20% equity. Most people's largest percentage of wealth actually has to deal with their home equity. So the sooner that you buy a property and the longer you own it, the more equity compounds over time. And this is generally when people get their very large down payments to put down on future properties. So just know if you don't have 20% today, but you have a payment that safely fits within your budget, I would say that it's a green light to buy a property. I know it's scary because interest rates are higher, but I promise you time in the market always outweighs timing the market. Now, I hope this helps you understand just overall cost of buying a house. So if you're trying to calculate general guidelines as a first-time home buyer and know that you have been pre-approved, you're gonna wanna calculate whatever your percentage is based on your purchase price. And then you'll wanna do anywhere between 2 and 6% depending on your area for closing costs, and add those two things together. Do not forget that there are the cost of moving that you want to consider, the cost of turning on utilities. There is an earnest money, good faith money that you put down at the initial part of your contract. So all of those things are things to consider when purchasing. It is also not uncommon to have to prepay for an appraisal or for a lock fee, especially in this environment. So just know that not all costs are due at closing. You will have some upfront costs as well. But if you have any questions about that, or want me to do a live, or want me to do an even more detailed breakdown of what closing costs are, let me know. And if you know of anyone considering a home purchase, I hope you will pass on this video. Let's break down things that you need to know to make a smart home purchase. Things that I think make smart home purchases. 1, you've done a complete comprehensive budget and you can safely live off of 70% of your net take-home income, and this includes the new budgeted mortgage payment. 2, you have 6 months reserves in the bank, and it doesn't matter if it's in a 401k or in an IRA, you just have to be able to tap into the funds in case of hardship. And 3, that you have accounted for maintenance items and you have a maintenance account that you will put away money into every single month, because being a homeowner, you will have to pay for things like landscaping, air conditioning maintenance, flooring maintenance. I recently moved into a property and had all kinds of plumbing issues, and so having a home maintenance account was super important in making me a successful homeowner. Now, things that will not make you a successful homeowner: buying before you are ready. So if you do not have a payment that safely fits within your budget, if you cannot safely save in your budget, it's not a green light. You never want to purchase a house out of desperation, because doing that will make you house poor and will create all other kinds of financial issues that will make it harder for you to get ahead in the future. There are times when it's important to rent and put money into retirement savings or investments, and there's times to invest in home ownership. You may consider moving to an area with cheaper housing, or getting a roommate, or taking on a second job, right? Things that you can do to increase your earnings before making a move before your budget says it's ready. And the reason I say 70% for your overall lifestyle is so that you still have 20% to do debt reduction and you have 10% to continue to add to savings. If you have any additional questions about budgeting, I have several other videos that I will tag below, and there's also a free budget guide on my website. Would love to hear any and all questions you guys have, and don't forget to leave them in the comments below after you like and subscribe to this channel. So I appreciate you guys. Thank you for tuning in to another money tip video. And guys, let me know in the comments below what other future videos you'd like me to make.